you want to have success, if you want to be able to build significant wealth, you have to have a plan of knowing where 99 cents of every dollar is going to go before it comes in.
Welcome to the Next Level Income Show, where it's our goal to take your income, your investments, and your life to the next level. I'm your host, Chris Larsen. If you haven't yet, get a copy of our book for free at our website, nextlevelincome.com. That's www.nextlevelincome.com. Just click on the book link, and I'll even send you a copy if you put your address in. On today's show, we have Eric Miller. Eric is a seasoned financial planning professional with over 20 years of experience, dedicated to empowering private practice owners and associates. As co-owner and chief financial advisor of Econologics Financial Advisors, a registered investment advisor, Eric specializes in strategic financial planning, including investments, retirement, asset protection, tax strategies, debt elimination, and business transition planning. A registered financial consultant and graduate of Capital University, Eric is also a prolific author and speaker and has published countless articles, videos, and podcasts, and he is the best-selling author of How to Become a Financial Beast. He has presented at hundreds of events nationwide and weekly hosts the Financial Beast podcast. Eric, welcome to the show.
Hey, happy to be here, Chris.
Yeah, I'm excited to have you on. As we shared in the intro here a little bit about what you do, Eric, and we're going to have a nice conversation, maybe try to figure out, what investors can expect out of the markets today, but also what active steps that they can take to really create a more robust portfolio for themselves, for their future, and for their families as well. But I would love for you to share a little bit about your path and what you do with your group.
Yes, and thanks again for having me on. It's pretty simple. I think I always knew that I wanted to be in the financial industry of some kind. I'm of that age, Generation X, where we used to have the USA Today. Remember the USA Today?
Oh, yeah.
It had all like
Absolutely.
the different sections, and I always loved the money section, but I realized I don't know what any of these things mean. So I had to do a lot of self-study in that area. But I just loved, and I knew that I wanted to help people in this with their personal finances.
Yeah.
So we had the bright idea in 2008 to start our financial planning company. And, you can imagine what happened in 2008. It's a hell of a time to ask people for money and investments.
Wow.
But we knew I come from a healthcare background. My family's in healthcare, and I saw the good, the bad, and the ugly of people in this space.
Yeah.
Very excellent when it comes to helping patients, not so much when it comes to managing money.
Yeah.
So just decided this is the group, this is the tribe that we want to help. And ever since 2008, that's what we've been doing.
Wonderful. Yeah. Well, I think, hey, if you can start in a downturn like that and build a robust business, then you can survive in any market. So yeah, I'm sure that wasn't easy, but it may have been the ideal time.
It seems like those are always the best times to start, when there's a lot of turmoil.
Yeah. Yeah. And, the value you provide during those times, is tremendous, I think. I, like I've spent a lot of time in the healthcare space, and it's interesting, there's some stats out there when it comes to doctors, when it comes to surgeons. And when I worked for Medtronic, I was with them for 10 years. One of our company policies was that we weren't allowed to fly with physicians. And the reason was that there was an accident with that company, and several people passed away in that. But doctors, look, I've worked with neurosurgeons, some of the brightest individuals out there, incredible. But it's, when you're smart in one area, sometimes you think, oh, my intelligence and knowledge in one area moves into another. And, doctors can sometimes say, oh yeah, like I can manage my investments. I can fly a plane and do this. And they don't always trust the systems that are out there. And that's where, some of these statistics have come through. So I think, what you're doing with practice owners is terrific. But you specifically, and I looked at this when I was doing my MBA, you're a registered investment advisor. Mm-hmm. And some people might not know what that is, but what I discovered, we were chatting before the show, that was one of the things I wanted to do coming out of my MBA. But there wasn't a lot of opportunity in that space 25 years ago. And what I found was the options that were out there to be a financial advisor, you were basically just a glorified salesman with with a product package that was limited. Eric, do you
Correct.
mind explaining to the audience, how an RIA, how a registered investment advisor is different than a quote unquote traditional investment advisor?
Yeah, there are different tiers definitely to this game.
Yeah.
There's different licensing that you would need. There's designations people get, and I think everyone gets all these things confused to some
Yeah.
degree. I would say that a registered investment advisor probably has the highest standard of care. There's a loyalty, there's a fiduciary responsibility that we have to
Yeah.
our clients. And I say that because, look, I mean, I've met, I'm sure that there, physicians out there that have degrees and have licenses, but you wouldn't send your kids to them. So there's definitely like I mean, you still have to be good at your job. You still have to love
Yeah.
what you do. You still have to have a system in place. But I think by and large, the RIAs, are allowed to do a couple things. Not only can we do investment planning, investment management, we can manage money, but we do financial planning, which
Yeah.
is how do we manage the resources of a household. And if you're going to ask me what's more important, like the actual investment performance or the system that you set up to how you manage the discipline that you have, the habits that you have,
Yeah.
all those things, I think that they're probably infinitely more important than the return on investments. So
Yeah.
we try to concentrate on both of those things. And I think that they're very much required if you're going to have success with money.
Yeah, I love that. It's kind of like going to see a personal trainer, and it's like, okay, I can go to the gym, I can do a specific workout. People get bogged down. It's like, oh, how many sets do I do? What do I do with this? But that plan, like, am I eating the right food? Am I working out on a consistent basis? Do I have that discipline? Ends up being more consequential than like, what am I doing day to day and doing that. And I think, what you said is tremendous. It's like, do you have the plan that's in
Yep.
place? And as the markets go up, the markets go down, asset classes, rise and fall. And, we've seen gold on a tear this year. We've seen the markets, we've seen Bitcoin over the last decade. It's like, okay, do you have a plan? And that's what, we talked about before the show. That's what the ultra wealthy do. That's
Yeah.
how the billionaires, the ultra wealthy, the family offices, the endowments are different. And you bring that same sort of structure to your clients.
I think so. I think that's a big mistake that a lot of people make. And if, not to jump into it, but I will, I think one of
Yeah.
the key disciplines that you had mentioned, the family offices
Yeah.
and I guess the ultra net worth, which I needed that defined. Like what's the difference between a high net worth and an ultra high net
Yeah, I
worth? And,
think I last time I checked, like ultra high net worth is like 30 million or above. Then you have, your
okay.
centimillionaires at 100 million. You got obviously your billionaires, but and I might, that may change, but I think last time I checked, ultra high net worth was 30 million or above.
And I would say one of the distinguishing features that those people have is that they know where their money is going to go before it comes in. And if you look at
I
the
like that.
fundamental
Yeah.
mistake that most people have, most people do make money, comes into my bank account, and then I decide of where it goes. No, 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 no,
Mm,
no. If you want to have
yeah.
success, if you want to be able to build significant wealth, you have to have a plan of knowing where 99 cents of every dollar is going to go before it comes in. And that's true for your household. And it's really true for your business as well, if you want to
Yeah.
remain profitable. And that's kind of one of I wouldn't even say it's a secret. It's just one of the disciplines
Yeah.
that I've seen successful people have with money that do that.
I like that. It's like going to the grocery store. It's like, do I go to the grocery store without a list when I'm hungry? Or do I
Yeah.
plan my meals out ahead of time and say, hey, I'm going to go to the grocery store with the list and I'm going to avoid the junk food aisles and, stick to those things. And I'm probably going to get a better outcome when it comes to my meal preparation.
Yeah. And it sounds so simple. It's
Yeah.
very difficult to do. It's very
Yeah.
difficult to do.
Yeah. So you're as much of a financial coach as you are a specific asset allocator. Is that fair to say?
I would say so. I think most of
Yeah.
the conversations that we have with people, I mean, does it involve around portfolio construction and
Yeah.
management of investments and all? Absolutely. I think the big picture things, though, how are we going to exit? What's our transition plan? What do we do with the money afterwards? How do we handle the day-to-day problems of running a business? All these things that for me to be a successful financial advisor, I just can't say I focus only on just your investment portfolio. I mean, I have to know about debt and taxes and estate plan and asset protection and all
Yeah.
these things, where I may not like actually implement that, but we know what the basics for you to be successful in those things. So yeah,
Yeah. I love that. So, you mentioned that one of the big mistakes that investors make is they don't have a plan before they get their money. What are some of the other big mistakes that you see out there with investors that are fairly easily to avoid or address?
I would say another problem is underestimation of how much you need.
Hmm.
Okay.
Yeah.
And I'll say that because people always ask me all the time, like, hey, Eric, where's money? I go, where does money come from? And people will say, well, it comes from Cotton Bush or it comes from the Federal Reserve or it comes from the US government, or most people have no idea where it comes from. That's another story. I'm like, no, money comes from necessity. It's
Hmm.
because if you really look at it, why is it that you're making the amount of money that you're making right now? Because that's what you need. That's what you think you need. Okay.
Hmm.
So when you start looking at the issue that most people have, they're fearful of running out of money, large part of the
Sure.
population, even accredited investors, people that are, when that, a million, 3 million, 5 million range. But by and large, I think most people just underestimate how much they're going to need to be able to live the life that they want to live. Their math is wrong.
Hmm.
So I think I would challenge a lot of people to look, whatever you think you need. And I think the average, I hear out there, you got 2 million or 3 million. It's like, okay, that may be enough just to get by barely, but is really the life that you want to live. So I just challenge people to rework your numbers and make sure that you don't underestimate what you think you need to be able to live how you want to live.
Yeah, and I've just lived this, experienced this with my stepfather, who unfortunately has dementia, and we moved him into an assisted living facility.
Mm-hmm.
And the
Good
numbers have
point.
been eye-popping when you look at it. And you look at some of the options that are out there, like specifically here in Asheville, it's a 2 to 15 year wait to get into the
Yep.
top-rated communities. And then I found out that if you want to get into those communities, you have to buy in like a vacation condo. So you're talking about 100 to over $1 million
Yep.
just to get in there. So yeah, to your point, if you say, okay, what are my needs on a day-to-day basis? Where is my equity? Where is my money? What if this scenario happens? What if that scenario happens? Yeah, can I, oh, I'm not gonna have to pay, my house is paid off, I don't have a mortgage, but you may end up in a situation where you say, oh, I want this option where I'm going to have a higher level of care, a more social community. I'm going to move to a different state to be closer to my family. And all those things can have massive swings in the amount of money that's needed for an individual or a family that's retiring.
And that is the fundamental flaw that the traditional, not to jump ahead, the traditional
Yeah.
financial planning
Yeah.
computations take into account. If you talk to anyone that's in the space, they're going to say, hey, what's the target? Well,
Hmm.
most of my guys tell me I need to save like 60 to 70% of my current income right now in retirement plans.
Wow.
And that comes right out of the CFP booklet, by the way. That's not me just making that up. That comes right
Yeah.
out of the certified financial planner, which is kind of like the highest designation in our
Yeah.
industry. And you logically think about that. Like,
Yeah.
I don't know that anybody wants to live on 60 to 70% of what they're making right now. I know I
Right.
wouldn't. So
Yeah.
the math is wrong.
Yeah.
And yet that's what most advisors are teaching their people. And that's, I think, a mistake.
Yeah, and I feel like that comes from like the quote unquote traditional or kind of like the old school planning, which is like, oh, I'm going to work, till I'm 65, I'm going to retire, I'm going to have Social Security, I'm going to pay
Mhm.
off my house, I'm going to live on less than I had. But I don't know, like I think you'd probably say the same thing, Eric, and most of our listeners that are listening right now would say, well, no, I don't want to be poorer, when
No.
I want to have more options. I want to have more wealth. I want to be able to travel. I want to be able to maybe help my grandchildren out with whether it's college or a home purchase, or maybe they want to start or maintain a business or transition as they transition out of their practice. And yeah, it's like, okay, well, can you get there? I think people that the clients that you work with, a lot of these listeners have that option. They
Yes.
just may have to restructure and look at some of those things. And then, you mentioned you don't want to jump ahead, but let's talk about like how your practice is different than a typical investment advisor. What options from investments do you offer that most investment advisors don't?
I'll start there in terms of, I think, our investment philosophy, because if you talk to a lot of people in our space, specifically invest or RIAs, and I get it. I mean, their paycheck is based upon how much in AUM, assets under management, that they have, and them getting a percentage of that.
Yeah,
And by and large, most of them, I think, understand how to manage, and those are mostly in public securities. So those are going to be, either in mutual funds or ETFs or individual stocks, but these are all going to be publicly traded companies, marketable securities, so to
yeah,
speak. 95% of their investment recommendations are probably going to be based upon that right there, because that's what they
yeah.
know, that's what they get paid upon. I'm not knocking them. I'm just that's kind of their system. I don't
It's how the business is structured. Yeah,
That's how the business is
yeah,
structured. And I don't, I guess the way that I look at it, I never went into it where like I have a bias towards one type of investment. Because I always, I learned early on that I don't want to be reliant on one of anything. And that includes one type of investment.
yeah.
And I think people would be surprised to know, like, wow, even though in the public security space where you have all the ETFs and all the whatever else, term you want to use, there's other areas, other institutions, okay, that can provide yields and
Mhm.
fairly competitive rates of return and just different experiences than just investing in a diversified portfolio of stock, of stocks.
Yeah,
So we start looking at, of course, there's real estate,
yep,
which people, have the ability to do. A lot of people don't want to do that because they're like, oh, I don't want to manage, the tenants, toilets, and trash. And then, of course, there's syndicators out there that do that. You have insurance-based products, so we're an insurance agency as well. And people, of course, they knock them because they see every and oh, these are rip-offs. And I'm like, okay, well, I looked and I found that
yeah.
a lot of these products have use, especially if you're trying to build guaranteed income. And
Absolutely.
then you have the alternative
You mi- you
investments.
mind if
Yeah.
I
Yeah.
step in real quick? So,
Yeah.
I was shaking my head when you said that because, I heard the same thing, 20 years ago. It's like, oh, just, buy term, invest the difference.
Yeah.
And I was having this conversation a year or so ago with an advisor, Eric, and he said, "Oh no, like whole life, I would never recommend that to my clients." And that's
No.
the cornerstone of our portfolio is cash value life insurance.
Yes.
And then I said, well, let me just share, a situation. What if you have somebody that wants to leave a legacy to their family? They want guaranteed return, and they also are going to, understand how to utilize the cash value either as a retirement stream or potentially, borrow against it, leverage it, to put into some different investments and do those sorts of things. And I said, let's say their net worth is 5, 10 million or more. And he's like, oh, well, yeah, it would make sense in that circumstance. And I said, well, I mean, I want to be in that circumstance. I want to be worth 8 figures, 9 figures. I want to, have that. And I want to make sure that my family's taken care of because my father died when I was 5.
Oh, wow.
And we fortunately he had small life insurance policies, but those helped give me a little bit of money for college. So I was able to come out of college through working and scholarships and, um, going to public institutions. I had almost no debt coming out of college because of that, and it wasn't a lot of money. Wouldn't even pay for a year of college today. But I saw the value in that, and then my mother passed away in 2011, almost 15 years ago now, and well, 14 years ago technically. And I heard my stepfather. I said, "Well, did she have life insurance?" My stepfather said, "No, it was too expensive."
Yeah.
And I thought, well, no one, people say insurance is too expensive, but when they use it, I've never heard somebody say, you know what? I needed the insurance, but I had too much. I wish I had less
Exactly.
insurance when they
Yes.
needed it. And I said, okay, this is, so it really, that's what led me down the path of exploration towards whole life insurance and those guarantees that are provided. So I changed my tune very rapidly through those experiences.
Just in the last 6 to 7 years, we've had a lot of people in the healthcare space have sold their practices, and
Mm.
we're getting people that are having 6, 7, 8, $10 million sales.
Yeah.
And I can't tell you how gratifying it is to just carve out a portion of that money, put it in something that I know is going to be guaranteed, and look at that person and say, you know what, if everything else goes to hell in a handbasket,
Hmm.
okay, then you're going to have this guaranteed income for
Yeah.
yourself. Okay.
Yeah.
And in conjunction with your social security, you can more than pay for your basic lifestyle.
Yeah. It's like
There's
a
a lot of
guarantee.
people,
It's like a
there's,
pension. It's like a
there's
personal
a,
pension.
exactly. And there's
Yeah.
a peace of mind to it. And I just think that you're foolish to think that anything else, do
Yeah.
people abuse it? Are there abysmal insurance salesmen that only do that? Yeah, but there are abysmal
Yeah.
salesmen in every industry.
Yeah.
So I
Good
think
point.
this is where I think going to a planner that understands all three of these things
Yeah.
is really, really prudent, and I think of high importance. So,
Yeah. No, I appreciate you sharing that perspective. And I think a lot of investors don't understand,
mhm.
some of the benefits that are out there and some of those guarantees. And when you have that as the, part of your financial foundation, there's a lot of security there. Then you can comfortably invest in some of these other areas that may yield higher returns.
Yeah, because the alternative investment space is certainly one. And,
Yeah.
is the risk increased? Absolutely.
Yeah.
Is there potential for good returns? Absolutely.
Yeah.
Is it an area that people don't really know too much about? For sure. And
Yeah.
that's just because they haven't been, I think, like it hasn't been made available to them,
Right.
by RIAs.
Yeah. Yeah. So I cut you off a little bit there as you were
No,
getting
that's
into the alternative space. So as you talk about that, like what types of investments fall into that alternative bucket?
so, for the way that we look at it, it's going to be mostly just private investments.
Hmm.
So there would be, even in the alternative space, I would put like gold and silver in the alternative space for sure, as a commodity.
Yeah.
Private lending. So we have a couple of,
Yeah.
on a platform that we have private lenders that are lending to private equity groups, and they're offer a yield for, based upon, the rates that they're lending at right now. There's real estate, there's hedge funds, all these things that are out
Yeah.
there. And I'm not going to pretend to like know the ins and outs of every one of them. I only probably use selectively like two or three of them,
Yeah.
but we've gotten good outcomes. I understand them. In any type of investment, you have to understand the operator and do they know what they're
Yes.
doing?
Yeah.
And I think that is paramount when you're trying to build a portfolio, is that you have to know what you own and you have to know why you own it.
Yes.
And most people cannot answer that question. We ask them, like, what do you
Yeah.
own? Why do you own it? And it's kind of amusing to us to do that, but it's a
Yeah.
starting point of education.
Yeah, no, it's fantastic, and that's a big part of the value and getting investors comfortable with the plan that they have in place, but also helping them walk through. That's one of the things we do with our coaching group is explain to investors the questions to ask because they don't even know some of the language and the questions. And that's one of the tools that we built is to help investors have conversations with syndicators so that they can
Yeah.
get that information to become comfortable, because it can be very overwhelming, which again is part of the value that you provide. Now, Eric, you all specialize at your firm really working with practice owners. So
Mhm.
doctors, dentists, which some oral surgeons, like my
Yeah.
wife's cousin is an oral surgeon, so he falls into the surgeon bucket. But also, I went to Virginia Tech, and I roomed with two veterinary students, and you work with
Taking
those.
a veterinarian. Yeah.
Yeah, yeah, yeah. So you brought something up earlier, and feel free to expand upon the clients you work with. But a lot of practice owners, as they get older, we're seeing private equity buy up some of these groups.
Yes.
So one of the things that you do is you help practice owners work through that transition as well, so that they can leverage the equity that they've built through many years of practice.
Yeah, one thing I learned, and I don't know if you ever read the book by Benjamin Graham, The Intelligent Investor. And
It's one of my first, absolutely.
it's a
Yes.
tremendous. I would highly
Yeah,
encourage everyone to read that book if they really want to understand I think the basic principles and fundamentals of investing. There's a great
absolutely.
line in there that says the great successes are made through concentration. Great successes are made through concentration.
Yeah.
But great successes are not kept through concentration. And
Fantastic.
what I
Fantastic
mean by,
quote. Yeah.
of course, what I mean by that is like you're going to get wealthy rich by kind of concentrating into an area. A lot of our practice owners, most of their wealth was in their practice and the building that they owned.
Yeah.
And they were benefited of that because a lot of these bigger private equity groups are coming in there and they're saying, okay, we'll give you 8, 10, 12 times earnings and we will buy practice from you. And they keep the building, of course, which is a great income stream for them.
Yeah.
And then from there, all of a sudden people have 7, 8, 10, $12 million and they're like, in the world do I do with? I've never seen all this money. I've never
Yeah.
anticipated I was ever going to get all this money. So we do help them at that point in time, really show them how to construct, I think, an intelligent portfolio that can provide them what they need, but more importantly, never have to worry about touching their principal and or ever seeing their net worth go down and never running out of money. That's the fun part of what we do, is to be
Yeah.
able to do that.
No, I love that, and yeah, and it's that's what I tell. I was just talking to my son's class here in the last few months. They invited me to come in and talk about kind of personal finance and what I do. But what we really ended up doing, we were going into the summer, and I asked all the students. I said, before you can invest, you got to make money. I
Yeah.
said, what are you guys going to do this summer to make money? So they all went around. It was really fun, Eric, to hear the kids talk about, oh, well, like I'm going to play at my parents' restaurant, like play music, and I get tips. My son went out and started like a power washing and a dog walking business in the neighborhood. And, it was really cool to hear that. But my advice to them was as you get older, pick something that you can make, be successful financially in, either a career or a business. And I think a lot of, as you were mentioning, a lot of physicians that are out there are also business owners and do that.
Mm-hmm.
And that's kind of like it's kind of like the dirty secret of investing, which is, well, you got to make money before you can go out there and invest and do that. And
Yes.
that just comes down to hard work. So yeah, if you've done that hard work and you've put all that time in, your group helps physicians, business practice owners figure out, hey, how do I keep as much as possible, and then really build this bulletproof financial fortress.
I think that's
Yeah,
spot on. One
yeah,
of I think the basic principles you were talking about, if everyone understands, I think these three keys, you got to know how to acquire money for sure, how to go get it, how to control it, I think
yeah,
is where people a lot fall down, and then how to invest it. And if you
yeah,
know how to master those three skills, you really shouldn't have any problems with money. But yet,
yeah,
here we are in society right now where I think 75% of Americans live below what, $70,000.
yeah,
So
yeah.
the education component is definitely missing.
Yeah, I love that. And you've written a ton of books. I want you to share a little bit about that. But before we get to that and wrapping up here, I want to have a little fun, Eric. So,
Yeah.
the markets are at, I would say kind of crazy valuations right now. So, are you having clients calling you and say, Eric, I'm nervous about where the stock market is? How do you coach your clients through markets today, tariff uncertainty, tax uncertainty, geopolitical uncertainty? How do you comfort your clients and direct them back to that plan that you've built for them? And what is some advice that you provide them during
It
times
all
like this?
To me, any investing strategy needs to, number one, you have to have a strategy.
Yeah,
A lot of people don't. I mean, I just looked at someone's balance sheet the other day. It was a brand new client, and I'm just looking at everything that they own, and they got like I bonds, and they got this, and they got that, and I'm like, this person clearly does not know what they're doing. They have no strategy. They're just
yeah,
throwing things up
sure.
against the wall.
Yeah.
You have to have a strategy. But most importantly, these big endowments, these big institutions, they all have what's called an investment policy.
Mm-hmm.
Policy are guidelines. These are rules of how you're going to invest money.
Yeah.
Okay. And I think that every household should have and sit down and have a really simple investment policy. Okay.
Yeah.
And that would, I think, eliminate a lot of what you were just talking about right there, the worry, the concern, the anxiety, and all those things. If I
Mm-hmm.
know, okay, I'm going to put money into this pot. Here are the characteristics of this pot. The prices are going to go up, prices are going to go down,
Mm-hmm.
but I'm not going to let the craziness of the world, which is their disadvantage, become my disadvantage. So I'm not going to respond to that
Yeah.
when we start seeing the craziness. It's
Yeah.
another principle out of, the intelligent investor right there.
Yeah.
So I think having an investment policy is how we kind of navigate working with our clients.
Yeah.
And it really does, and this, constant repetition of, all right, great. I know that your accounts are going up 10, 15, 20%. That's great. But this doesn't always last. And there's a reversion to a mean at some point in time. So just be prepared for that. I think
Yeah.
if you handle that with repetition and, our service models, we're talking to our clients at least every 6 weeks. So there's constant communication right
That's great.
there.
Yeah.
So I think just a combination of those, there's not a perfect answer to it. Emotions still get involved. People still
Sure.
see, all the, just like you said, geopolitical and it's like overwhelming, but 99% of your financial condition is under your control, has nothing to do with external factors. What are
Yeah.
you doing
Yeah.
that is going to dictate the outcome?
Yeah, that's why it's great to have that coach on the sideline as you're going out there. And I think of it like my boys play lacrosse right now, and the games, scores going up and down, but the coaches are always there, kind of directing them back play by play by play, and saying, "Hey, here's the playbook. This is the plan. This is what we're doing in this situation. Get out there, do your job, and control what
Yep.
you can and do that." Eric, what is the best way for our listeners to learn more about what you do, find out about your books, gain more information? I know you also have, you've got some great resources at your website, wealthforpracticeowners.com, which we're going to put in the show
Yes.
notes here. But what's the best way for people to get in touch with you and learn more about what you do?
That'd be a great way to do it. Wealthforpracticeowners.com. You can go to our website as well, just econologics.com, and that'll take you directly to our site. And we have assessments, we have books, we have all kinds of resources that if you're in the healthcare space, we got you covered on really anything that you would need to at least help you make good decisions when it comes to your money.
Yeah, I love it, and I'm excited to be on your podcast here coming up. And I love the title, Financial Beast Podcast.
That's right. That's
yeah.
right.
Yeah, so I'm excited there. All that's on your website. Great. You've got to check it out. Check out the Education Hub at wealthforpracticeowners.com. He's got articles, videos, webinars, trainings on there. Tons of information there, as well as a financial scorecard. Eric, it's been great catching up with you today. Thanks for sharing your wisdom and advice with our audience here. And any last words?
Any last words? Well, I guess, what can I say? I don't know. I'm actually having a blank right now, and you know what? I think people need to enjoy themselves in their money. Don't be someone that looks at money as something that you need to hoard. I think it's something that you can use as a tool. And I want people to be able to enjoy themselves, and having a lot of money is something that allows people to enjoy themselves.
I love that. And I would say be grateful. We live in such an affluent society.
Yes.
If you're listening to this podcast, you are probably in the top 1% of 1% of the world's population. Thank you for listening, Eric. Thank you for sharing your knowledge again.
I appreciate it.
Hey, Chris here again. I hope you found this episode valuable. Now, I have one more thing to gift you. We have a page for my coaching clients where you can get a free copy of my book, as well as much more from previous guests on the show. Just check out nextlevelincome.com/coaching to get a free copy of my book, audiobook, and much more. I'll send you a copy of my book and cover all the shipping costs as a thank you for listening to the podcast. Also, please like, share, and take just 90 seconds to give us a rating on Apple Podcasts.